Hey, good morning. Let's go over today's trade plan. So in the overnight session, overall, the buy side has been more dominant, but we also have seen the sellers active at pretty much every resistance level along the way. First, they were active at the 60.75 high volume node. From there, we got to move up into the 21.64 to 64.5 area, which marks Tuesday's RTH high. And then we have that open gap and naked VPOC at 64.5, and sellers were active on first test of that area as well. So even though overall from yesterday we've seen the buyers step back in, we are now in a market where sellers are active at pretty much every resistance area along the way, which is very much in alignment with what was covered in yesterday's trade plan video. At this point, heading into the open, our short-term bias is going to be neutral, and we are open to both long and short setups. We have the non-farm payroll, the employment report due tomorrow morning. So most likely ahead of it, even if the market does head higher, we're probably going to see short-term rejection or possibly even a failure, and then followed by more balancing ahead of the employment report due tomorrow. So on the upside, we have pre-market resistance at 64 to 64.5. Now that's an area that has been tested, and we've already seen a response in the overnight session, but it's still a valid area of resistance. Beyond that, we have the initial resistance zone at 66.5 to 69. That's another area where sell side can be active, and we can then start balancing again. And same goes for the 70.75 to 72.75, which is a zone that has potential to cap the upside. On the downside, we have pre-market support at 54.5 to 56.25 from the overnight low. It's not a major area of support, but that zone was quite resilient in the overnight session. And if we are holding above pre-market support and we just fail to take that area out, then it tells you that the buyers are still being quite active. And from there, we could go right back up into pre-market resistance and possibly the initial resistance zone. Below pre-market support, we have the previous VPOC at 53.75. It's another area that buyers can be active, so it's something to be at least mindful of. And then the more important area of support is the 49.5 to 51.5. And that's really the spot that buyers have to maintain in order for this market to continue balancing within a range. So if we break 49.5 to 51.5, then it does send a bearish signal. And from there, we can test yesterday's RTH low at 21.47, the 45 quarter level, and possibly the 41 quarter to 43 quarter, where buyers can again be active. Now, given that we have the employment report due tomorrow, and we don't really have any major economic releases on deck today, even if the market does head lower, ideally you want to see it continuing to balance within a range. That balancing can take place above initial support, or even if we break lower, we can still get buyers active at 45 quarter and 41 quarter to 43 quarter, and then continue balancing. So that's really why our short-term bias is going to be quite neutral on the day time frame today. Again, we're open to both long and short setups. The main thing is going to be to secure good trade location on both sides, long and short. And keep in mind that if the market is likely to just be in a two-sided range, then location is really going to be our primary edge. And then also be mindful of just the underlying internals and the type of momentum we're seeing in the markets. So, if we do go up on strong momentum, then perhaps look for a move into the 66.5 to 69 area. As long as you're securing a good trade location, that can still be taken as a short on first test. And same for 70.75 to 72.75. On the downside, if you're seeing excess weakness, then pre-market support could be taken out for a test of initial support. And as long as we are not seeing excess downside momentum, then 49.5 to 51.5 still has potential to hold. 45 quarter, same idea. And then 41 quarter to 43 quarter is stronger support, at least on the day time frame. And by that point, we would really have exhausted the downside range potential as well. So those are the main thoughts heading into the open. Essentially, staying out of the chop area, staying out of the middle, and only focusing on taking trades that are at key zones, or if you are taking a trade that is at aggressive location, then make sure that you have a lot of momentum behind the move. So for example, if you're shorting the market and it's not really at a resistance area, then make sure that there is a lot of downside momentum supporting your trade. And similarly, on the upside, if you are entering long and it's not really at support or at least a short-term, even real-time area of support that might develop along the way, then just be sure that there is broad market strength and enough upside momentum to carry the market higher into the next zone. As long as you're doing that, I think that you will find some good trade ideas even today. So those are our main thoughts heading into the open. Let's see, if one side does take over, keep an eye on 60.75, pre-market resistance, pre-market support. It'll help establish at least a very short-term bias, especially how the market responds to 60.75, I think will be a nice little tell right off the open. So let's see how ES responds to that, and we will take it from there.